Okay, Dan Fitzpatrick here, stockmarketmentor.com. And look, the market's been kind of choppy lately, very much so. At least that's what I see. I see that in my own trading. It seems like the only way to make good money these days is to just be chasing stuff and hop on board and just ride it up there. The problem with that is the problem with that is ultimately it's going to burn you because that's just undisciplined trading. And there's a reason why the best traders are disciplined, and that is because they're disciplined. If they weren't disciplined, they wouldn't be the best traders. Think about it. So the point is, you just kind of you have to have discipline, and sometimes it's important to recognize that you know what, there's going to be times when the S&P 500 is hitting all-time highs and my account is not, or my trades, none of them are bad because if they are, you need to sell them. But the ones that aren't working out just kind of really aren't working out. Hope springs eternal, but they're not there yet. So I'm kind of being patient. And the ones that are working are not exactly knocking the cover off the ball. And so that's kind of, and frankly, be perfectly candid with you, that's where I am. I've got some good stocks that are working. That's why they're good stocks, but they're not great stocks. There, I've torn the cover off. There you go. I'm not in the best stocks, but I'm in some really freaking good stocks. But what I want to show you is something that I put on today on our active trade list, and I want to show you why I did it. And then I'll show you a couple of examples, just kind of similar things. So I'm not just pointing to one chart. Okay. Now I'll go ahead and share my screen here. And the stock that I'm talking about here is ANRO. Get this out of the way. It's Alto Neuroscience. It's a biotech stock if the name didn't tip you off. And this volatility squeeze, I love. Now, this broke out on earnings. I can't say for sure. I mean, this has been on my list for a while. I may have mentioned this. I think I did mention it prior to earnings. And my admonition was, and if I didn't, this is what it would have been. My admonition was, hey, this looks like a really good volatility squeeze. It's setting up pretty nice. You can see it. Looks like it's really going to blow. The problem is it's earnings and it's a biotech stock. So the company could absolutely scream or the stock could have you screaming. So you can't really buy it. That's what I either said or that's what I would have said. And boom, oops. There went the stock up really, really nicely. At one point, it was up like 15% in a day. Okay, if you caught that, awesome. Then the next day, though, it's like, okay, well, the stock traded way down. Like from where this closed, the stock traded way down like 7% or so. 7% is a lot after you've chased the stock. So it's like, oh crap, I got to get out of this stock. And then bam, today comes and the stock moves higher. And then you look at volume and you can see that the trading volume on this over the last 3 days, here's earnings, then a sell off, and then today, three skyscrapers, green, red, green. And so this is still big buying here. Now, I can't say, boy, the institutions are sure jamming on this stock because even with the high volume today, it's less than 1 million shares. And the average volume over, 20 days, the average volume is less than 250,000. So this isn't a super liquid stock, but it's a trade that's working. Now, this is what I like about it. It's like, oh crap, here's the oh crap pattern. I missed it. Oh crap. Pullback. Oh good. Didn't get in. Now the follow-up, boom, this stock is running up. So this is literally like a phase one breakout, a phase two pullback, a phase three continuation pattern because this broke out above Thursday's intraday high. Okay. That's a pretty cool thing, but it is not a unique pattern in this way. I'll just show you a couple. JB Hunt, gave you a similar thing. It's a little bit more muted than the other one that I'm going to show you, but it's the same situation where you see the stock ran up and up, and then bam, it broke out above the 50. The next day, it gapped down, ran even higher, sucks you in, and then comes back down here. It's down 2.5%. And you say, well, what's the big deal about that? I'm talking about the pattern, not the percentages. But this had a little pause. And then finally today, the stock gaps. I don't think it gapped up. I think it was about sideways. And then it trades up and closes above this close here. So this is a stock, and you look at the volume, nice high volume skyscrapers there. So this is a stock that's working, but check out Nebius. This is virtually the same pattern, the same idea as we get here. So this is a big move to the upside. Look at the massive volume here. Earnings move. Next day, okay, continuation up to here. So at some point this next day, this was up another over 6% and then traded from that 6% up. It traded down 10%, 10.5%. So this was a really wild day. And if you're saying like, okay, this was the breakout, then the second day, holy crap, it crushed everybody. And then finally, we get this third day here. All right. So when was this? Friday. So we get a breakout, little pullback. That's a phase two. Now we get Friday, a continuation day, right? Well, today was a pause, but the stock is trading right along the upper Bollinger Band. So what I'm pointing out to you is you do get these kind of patterns. On the second day, he rested, big move on the first day. And then the second day you look at it and say, okay, well, that's over. That I missed that trade. And that's really not the case. The stock is just coiling a bit, and it's going to bring in more buyers. So anyway, with ANRO, this is what I put this on the list. And I think this roof here from Thursday was at 33.67. I think I put this on at 33.60, 33.61, something like that, right about where it is right now. And the stop was just down here. I'm looking at this candle here as being one that's going to continue like higher low, higher low, higher low. I think should continue to get higher lows. So I would want to protect this trade at the very lowest with a stop just a little bit below 31. And you can protect it at a higher level if you want. It's your money, your trade. But what I'm just telling you is I'm pointing this out. You get these second day resting phases and then a third day continuation. So don't blow this off. And by the way, I do not think it's too late to buy this. I think you can do just fine with it. So anyway, a lot of different types of trades going on in the market, and I'm trying to bring you the right ones that work for you. And by the way, you got to be a member of Stock Market Mentor. At least join me for 14 days. It's basically free. We've got, just to let you know, we've got a massively high conversion rate. And what that is for you non-marketers, it's if you subscribe to a free trial, I'm not going to give you percentages because they don't mean anything, but a very, very high percentage of people stick around. And the reason is because they make money. That's the only reason. I mean, I'm a witty guy. I don't want you to stick around for my humor. I ain't that funny. But people stick around because they're making money. And so I want you to be one of them. All right. So hit that button. Let's go make some money. All right. I'll see you next time.